Right on, man. I'll take a look-see at the first thumbs up. If you guys are picking me up from the Wayne's World studio here in my front room, obviously been making some technological improvements of the channel, but I'm a little gun shy to go to OBS streaming just yet and kind of introduce you guys to some of the websites that I'm on. Awesome, Dave. Thank you so much. Obviously got a group of channel creators in here, some of the loyal community members to come in, do our weekly live chat. My name is Ryan. I run the Independent Investor channel. I've done so for the last couple years. Really just kind of been making a mark on YouTube over the last 1 year, to be honest with you, and that's fine. I take on a great level of responsibility talking about this topic, all right? And I joke sometimes talking about how serious this is. This is not something that you need to screw around with people's money, okay? I learned that very, very young in life, very, very young. If you're going to offer advice to people in way of just helping somebody maybe see something that they don't have the capability of seeing themselves with regard to money, you better be freaking right, all right? And I thought that there was a lot of potential to reach a lot of people through YouTube, and that's really what brought me to this calling, and that's really what I believe that it is. And this is my topic, all right? This is mine, all right? Investing is what I love to do. I love to talk about it. I have the ability to help people who might not see the ability to be helped themselves. I know that I can't help everybody. I know that this volatile stock market is going to shake a lot of people out. I get that. And I tell you what, I really wish I could just say the magic thing or offer the magic piece of advice to bring everybody along, because I honestly, in the bottom of my heart, feel like investing is something that you should participate in, all right? But over the last couple months, the stock market has doled out some lessons. If you're able to pay attention to those and be critical of yourself on what you've learned over the last couple months, not too critical, okay? I've got some folks that are coming through the channel that are actually throwing in the towel right now. And I think that's absolutely just not in line with prudent advice. Look, if you were staying on the sideline and looking at this chaos, I can respect that. But if you've made the decision to enter into the stock market at whatever exposure level you guys were satisfied with, then stay the course, man. It's so, so important that you stay the course and not make a decision. If any rational person looked at the stock market right now, the rationale would tell you, what are you doing? Why are we doing this? This makes no sense whatsoever. I'm losing money every day, right? These are some of the commonalities that are coming through, especially the news media right now. They're having a field day with what's going on. It's really amazing how, you know, we get guys come on the stock market and talk, and they say the wrong thing. I mean, we've got commentators from the White House come on and they say one certain thing and the Dow will drop 150 points. It's amazing. It really is. But I want you guys to understand a few things about the stock market, all right? Life does not revolve around the stock market. It doesn't. If you're going to make the decision to enter into the stock market, you will continually evolve in your tolerance, all right? Your defining of your tolerance. And I say this all the time. People out of fear tend to shy away from even becoming involved in the stock market because they want to believe that they have their idea of tolerance already defined in their mind, okay? And I will tell you this, all right? You will never, ever truly understand what your capability is in the stock market if you're unwilling to give it a try, all right? Give it a fighter's try. And here's the common thread between the community that comes on and seeks a message through a conduit like YouTube, all right? The common thread is that we are grasping for something better in life, okay? Investing is, in and of itself, the way to wealth and prosperity, okay? I didn't make this stuff up, guys, all right? I'm just here to deliver you guys the truth about what people need to hear, okay? Not what people hear, all right? There's a big, big difference. And I knew there was a huge potential for a lot of damage when we went on a 10-year bull market and I started to observe the landscape. When I came onto YouTube, Ryan Scribner had 6,000 subscribers. I think Jeremy with the financial education channel had about 25,000 subscribers. and he was about the first one. I never got into Ricky Gutierrez when I first started. Those were the two guys that I kind of paid attention to, you know, and Monk and Nate and all those guys, they kind of started up at about the same time that I did. They all had about, you know, around 10,000 subscribers when they first started. You know, I remember when some of the channels started. I've got some of the folks in the group here, some channel creators that are trying to do the right thing and offer assistance to people. And I applaud your efforts. I really do. But here's what I saw when I scoured the landscape. All right. There was no talk about retirement accounts. None. Zero. It was all about buying and owning stock and making a quick dollar. Why? Because that's what the environment was, okay? If you looked at the short-term horizon and you had less than 10 years of stock market experience, that is all you knew. That's all you knew. So this was great. I can get involved in the stock market. I can lose a ton of money, but I can throw it out there and tell people that this is all they've got to do. All they've got to do is get involved with the stock market, and it's going to be a yellow brick road, and all you've got to do is walk it until you get to Oz. That's all you've got to do, all right? Now, that's my soapbox a little bit, all right? What we're going to end up with is carnage, okay, on YouTube, because there was a potential there, in my opinion, to create a ton of misleading information for people, in that all they had to do is open up a Robinhood account and just go ahead and boop, 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 and boom, you're a stock owner. And then all you had to do was wait and be able to quit your job. All right. Now, is that reality? I don't know. For a lot of people, maybe they think that that's reality and that's possible. For a lot of people, they actually think that they can tune into a YouTube channel and understand how to make it to be a millionaire in 10 years, right? Now, possible? Absolutely possible, all right? Reality? I don't know. You guys be the judge of that, all right? But entering into the stock market, there is really just a very few ways of doing it correctly, all right? Now, once you enter correctly, you can succeed with a number of different products, okay? That's why I tend to not focus so much on the product. Why is the stock going down? Why isn't the stock going up? Why is this ETF not performing? Why is the stock market not going down? Why is the stock market not going up? Why this? Why that? Why? Drop it. Who cares? The video that I came out with this week, all right, and I hesitated coming out with a video this week because I really just wasn't feeling it, all right? I sat down one night to shoot a video, and I turned on all the lights to shoot the video, and I sat here for just a second, and I said, you know what? I'm not feeling it, all right? Turned all the lights off, and I went to bed, okay? The very next night is when I put that down on wax, and the reason why I did that was to get you guys to understand that it's so easy to follow the crowd, all right? It's so easy to just follow along with what everybody is trying to explain is going on right now, all right? And I'm going to tell you, a 20% correction is not a bear market, okay? You can argue with me if you'd like. It's not a bear market, all right? Nobody was complaining when the stock market was skipping thousands of Dow points. Nobody was complaining, saying, hey, maybe the market's going up too much, or hey, maybe you should take some defensive positioning, or hey, the stock market is a war zone, take heed. Does this sound familiar to you guys? I was saying this, and I don't do the, hey, I told you so, but the sheer fact of the matter is, for the folks that have followed me for quite some time, all right, and they've captured some of the content that I've put online, you know, when I was unknown, all right, they can attest to the fact that I have put that stuff on there. Be wary, okay? The stock market is not a game. All right, it's very serious business. It's not there's not a minor league stock market. There's the major leagues, and then there's paper trading. That's it. All right, this is real money and real scenarios, and there's concrete, proven ways of entering into the stock market that have been proven to work all the time. And I cringe sometimes when people say, look, I just want to be a dividend investor, and that's all I want to be because that's what makes sense to me. That's great. Please acknowledge to the fact that you are not diversified by doing that, all right? if you have any form of diversification, you're seeing that defensive positioning paying off right now as we speak. All right, guys. So I just want to welcome everybody. I'm going to go down the list again of channel creators. I always call out the community, but listen, guys, in closing, this is one of the coolest things that we've got going on YouTube. All right. I'm not the most polished guy. I film from my living room. Okay. I do not drive around a sports car. Okay. I'm not going to tell you how to be a millionaire within a few years. Not going to do that because I have reality pouring out my ear. All right. And I have way too much obligation to just deliver reality as opposed to talking about pipe dreams. All right. I can tell you that I manage a portfolio that's worth well in excess of 300,000. That's the truth of the matter. All right. And I started with nothing, zero. So if I can do it, all right, and avoid some of the mistakes that I made along the way for you guys, this will be some of the most valuable content that you're going to hear on YouTube. So I just want to welcome everybody who wants to spend an hour. I typically go for 2 hours because I just love talking about this topic. When I get done with my live streams every single week, I'm typically exhausted because I give you guys my very, very best effort in trying to make sense for you folks out there that are asking why in the hell I am doing this. This makes no sense to me, right? It made a lot of sense a few months back when Ryan was talking about do-it-yourself investing and, investing for 40 years and having 7 figures. He put it so elegantly and he encouraged me to invest in the stock market. Yes, but in the same breath, I was also saying, hey, there's a whole nother side to the stock market that at times is freaking brutal. All right. Now, for you guys that are staying the course here, man, have made your way into the community, I'm going to be focusing on the questions that have come through the group here. But first, I want to focus in on my channel creators. I had Brent with the Financial Investor pop in the group tonight. I want to say good evening to him. He's actually offering some of the moves that he's made, some of the stocks that he's looking at in the community here as well. A good longstanding friend of the channel as well. Average Joe Investing. Dave is in the group as well. I'd like to specifically call out Dave, who's in the group. And finally, I've got Investing Wisely in the group here, who I've been getting to know in a big way, man, who I just respect the hell out of, who's also in the group here. I want to welcome Investing Wisely. And finally, I've got Lydia Santiago from the West Coast in the group here, willing to throw down and probably offer some perspective on somebody who owns a very heavy stock portfolio. And I don't think she's that old. And I give all the kudos in the world for somebody who's willing to stick it out and incur some of the largest swings that you can. I know what her portfolio has. All right. And if you're a brave soul like me to own Amazon right now with this volatility going on, here's to the ride. Seriously. But I want to welcome the channel creators certainly for coming in and actually helping me out here in the group. Getting some channel content coming through for some folks that are just hitting me up in a genuine sense and saying, Ryan, I don't know if I can freaking do this, man. This is silly. I'm raising the white flag, man. I'm done. I'm throwing in the towel. I'm going to save whatever money that I have right now. And I would just encourage, man, if there's one of the 61 people out there that are joining this live stream, the channel's new. All right. I'm going to be doing this live stream for the rest of my life. And if you guys think I'm kidding, try me. All right. Test my devotion. All right. I love doing this for people. I love doing it for the 63 people who are in here right now. Now, I only have 16 thumbs up in the live stream right now, so I can only assume that I'm getting to about 25% of them right now. So for that, oh, Jesus, now it went up. If I can make 63, that'd be cool. But listen, one of these live streams, I'd really like to crack 100. But if you guys have folks out there, friends of your guys's, share, because I'm not getting any love from YouTube. I can tell you that much right now. All right. No love, baby. No love. All right. New folks come to the channel. They don't get it because I'm a dry, boring fella who's right. Deal with it. All right. And they don't come to the channel because I don't have a lot of charisma and I don't dance and sing for you guys. I'm not a very good dancer and I'm not a very good singer either. All right. I'm not going to do that on this. But what I do know is practical, real, unique approaches to the stock market. All right. And do it yourself investing is a unique way of doing it. I only say do it yourself because that's how it was posed to me today from somebody who said, man, I like your philosophies on do it yourself. And I took a lot of time in responding to that individual, man, because my heart just goes out to somebody who doesn't see through the forest, you know? And I just think it's so important, man. And I think it was Bill Schultz who's got a channel as well, a new channel. And I don't know if he's in the live stream tonight as well. If I did see, I will give a call out as well. Brand new channel, actually. But just appreciate the heck out of his help, commenting and coming on there and just freaking trying to help somebody out, man. We don't have enough of that in this world. And I felt like there was a genuine sense of need for a little bit of support there. And I don't mind to render it. Whether or not I got through or not is yet to be seen for this individual. But I'm going to click in here. I've got it top chatted right now. I do appreciate your patience with that. I'm going to kick over and just do live chat to make sure that I'm catching everybody. But again, welcome to everyone. 67 folks in the group tonight, ready to hit the trenches, man. This is what it's about. All right. The stock market goes up. And did you actually believe that the stock market actually goes down? All right. We've been kind of lulled into a lot of complacency over the last 10 years. All right. For those of you guys who think that Jay Powell shouldn't have raised interest rates, you need to wake up. All right. He absolutely did the right thing. All right. Now, the Fed does pay attention to the stock market, but raising interest rates toward neutrality is absolutely the right move. The problem was Jay Powell took over when there was already a succession of interest rates already on the books, right? So it was the speed of the increases that's put this jolt into the stock market partially, all right? But he did the right thing with what the data had provided. We've never had a recession with 3% GDP growth going on, never in the history of the stock market. And I wouldn't put it past this stock market to surprise us, all right? Everything's off the table with regard to technical support. All that's out the window. Where we're going to have an end to it. Today was a triple witching day, all right? So for you guys that don't know, there was rebalancing. There was rebalancing in the portfolio. There was investments that hit, and then it was on a Friday as well. So those is what's considered a triple witching day, and it was actually double the volume today. And you saw a little bit about that in the morning. Now, there was a comment that drove the market up, but throughout the day, the stock market just continued upon its path. And I honestly think that gravity was pulling it down. You know, I've watched it go down every single day. And you know, what is the smart money doing right now? I'd love to hear your guys' comments. I know what I'm doing. All right. I'm continually building cash. Number one, I'm going to be increasing my contribution to my employee sponsored program. So for you guys out there that maybe aren't getting the maximum match, now's the time, baby. Turn it on. All right. Now's the time to start to put your foot on the accelerator and fire this bitch up. All right. That's how you do it. Okay. So cash, throttle up on the employer sponsored. Think about filling some of those gaps that I identified. See, there's a reason to my madness. There's a reason why I give those tools for you. A lot of people looked at it and they were like, I don't understand. Okay. I don't understand why you come out with a video like that. But if you can critically look at your portfolio and say, man alive, it would be sure nice to have some fixed income in my portfolio. Guys, I added it 3 months ago. All right. One of the best things I did was to solidify and take $25,000 and build a fixed equities portfolio. Guys, I'm a freaking believer now. I am a believer because I'm watching how these things perform relative to the overall stock market, relative to dividend payers, and relative to the growth in the stock market, right? So look at the gaps and see how you can improve those portfolios. Now here in less than, what have we got now? About 10 more days until the first of the year. What happens at the first of the year? New contributions are eligible. So for you cats that have been sitting there watching the stock market shoot to the moon over the last 10 years, every single day that goes by of volatility where the stock market turns south, you guys are being provided that opportunity that you guys have been missing over the last 10 years, all right? So congratulations to you. I will have a drink for you guys, all right? Because I want everybody to be able to participate in the stock market. And it's been hard to do that, to find your entry point in the stock market. Now, where's the stock market going to go from here? I don't know. But all I can tell you is it's down about 3,000 points from the high. We're down off 20%, which meets one of the criteria for a bear market. And that's what I am willing to acknowledge. That's it. No more, no less. I'm not going to say that we're not going to go down another 2,000 points from here. All right. Do I think that's going to happen? No. And you guys that join the live stream tonight, you're enjoying my personal opinion about the stock market. I actually think today we're going to start to get a relief a little bit back toward those levels. Now, I would caution you guys to be very, very careful. If you do have cash to deploy, don't just dump it on the stock market right now, okay? I've had a few people say that they're aggressively buying the stock market right now. Be careful. There's no reason to lose your freaking mind and just start buying everything under the sun, okay? We want to scale into the stock market and be smart with our application. Be smart, all right? If you've got 10,000 of capital to deploy to the stock market, take freaking 20% and devote it to the stock market. If you've got 10,000, put the 6,000 into your individual self-directed Roth IRA account. Let it sit there and deploy 2,000 of that cash. I'm talking about being freakishly defensive. Why? Why not? Why not? You have the freedom to do whatever you want. If you took $10,000 into an investment firm that charged you 1.5% management fee, they're going to want every bit of it. Some of them set minimum thresholds of 500,000. I will be doing a video coming up on fiduciary and how big of a crock of garbage that is. All right. Fiduciary means nothing to me. All right. You guys are going to want to stay tuned for that video. Fiduciary is a crock of garbage. Garbage. All right. Garbage. Do not put your trust into somebody who says they're a fiduciary and then reaches around your pocket, has the courtesy of providing you a reach around and taking 1.5% of your hard-earned money. They're starting you to invest in a vacuum. And as you've been proven over the last couple months, it's extremely difficult to make money in the stock market. And I tell you what, that 1.5%, that can go a long way over time. Because the financial institutions, I've said it many, many times, they found a way to make money off of individual investors, whether or not the stock market goes up or the stock market goes down. They could care less. They could care less. All right. Good evening to everyone. That was my opening monologue for 22 minutes, man. That was Ryan's opening monologue. I hope you enjoyed it. I hope you learned something from that. If you need to play it back in slow motion, you're totally willing to do that after the live stream. I'm going to get to the reason why I do this channel, and I'm going to scroll up to the top here, and I'm going to start getting to some questions here, and we can get into the nitty-gritty, what I call the trenches of investing for sure, and see where kind of people are tonight. I've got MZG Wendelin Sunrise. I know I've seen you in here. Welcome to you. It's really cool to have you in here. Golffish, Ryan, I saw a good quote you might like. Seems kind of fitting with the current times. Getting rich is hard. Being poor is hard. Choose your hard. I agree. I really do. Look, here's the thing. I don't freaking have a problem with recommending people that they work hard. Okay, you're not going to hear garbage from me to go out and quit your day job. All right, I have a day job, which is why a lot of people come on the Independent Investor channel and tune into me, because I give a healthy dose of reality, because I live reality every single day. All right, I live it. So people can resonate with the message, man. I've got firefighters, I've got law enforcement officials, I've got doctors, I don't know how many financial planners I have on the channel. That would be an interesting statistic. But I've got regular people who come on the channel, teachers, whatever it may, social workers, single mothers who come on the channel, man. I've got folks that are young, aspiring to go to college, who are entrepreneurs looking to take control of their future. And I don't care what background, I don't care what ethnicity you come from, all right? It's the desire inside of you guys that actually drives your curiosity to become invested in the stock market. Why? Because there's enough validation there in the stock market to provide that to anybody looking to feed that spark inside of you. All right. It has to go a little bit deeper for you. You have to feel it, baby. You have to. All right. You have to be a fighter. You have to. All right. And for you guys that don't mind fighting when the situation presents itself, this is the message for you guys. And I don't mean that in the physical sense. I don't. But why is the expectation always such that life is just going to lay down in front of you? Why? Why? Why is it so difficult to understand or relate with the prospect of just working hard? All right. Working hard on a program, understanding that you're going to make sense. Excuse me, you're going to make mistakes at certain times of your life. And that's all right. All right. It's how you get up from those mistakes and move on that's going to really, really define your life. And it's going to give you that opportunity to reflect back on those opportunities and not regret anything. You know, that's the key. All right. And this is what's given you guys that opportunity. I'm really, really passionate tonight because I responded to one of the comments that came through the community that basically said, Ryan, I'm done. I'm throwing in the towel. I'm done with it. I can't do it anymore, man. And I don't know what the losses amounted to. I don't know. And when I say losses, I say that figuratively. Okay. I've got about $20,000 down right now in the portfolio. That's totally fine. My heart goes more out to somebody out there who's in my mind making a poor decision to pull out of the stock market, as opposed to just seeing it through. You know, you're looking at such a singular moment in time, right? To make such a big decision on it, it doesn't make any rational sense to me at all. And I hope I got through to him, and hopefully that person can really read and resonate with my statement. But listen, there was a little bit of, hey, I came onto YouTube and I found the motivation to invest, you know, and I did it, and I did it right before this turmoil, you know. And I think there was an attempt there to kind of link and say, hey, if I hadn't to come onto YouTube and sought out, you know, some financial opinion about the stock market, then I wouldn't have ever found investing. Therefore, I wouldn't have been subject to risk. And I hear this all the time. All right, I really do. And I tell you what, let me give you just a takeaway and a root of investing. Don't make excuses. Don't. All right. The best thing that I've ever tried to teach you guys is to anticipate the worst. All right. You've heard never put in the middle what you're not willing to lose. All right. You've heard that cliche. I just put it in a little bit different form and fashion, and I deliver the information rapid fire in a lot of different ways. All right. In defining your percentage of risk to the stock market over a broad spectrum. And I think a lot of people just say, I want to be 100% and that's it. And that's the final, and that's the way I'm going to do it. Instead of saying, you know what, maybe I'm just going to scale into the stock market at a 20% clip like Ryan's talking about. You know, most people think along the lines of, I've got $1,000, therefore I've got to get it into the stock market. And then it takes a 20% haircut. How many times have I said that on the channel? It takes a 20% haircut, 20% haircut. Well, here we are. What are you going to do about it? All right. Did you overexpose? Did you just take my advice and hear it, but not deploy it? Right. These are very, very real things that are just going to prepare you that much more for the next time, because you think this is going to be it. You think with quant trading and algorithmic trading going on right now that somehow volatility is going to go away in the next 30 or 40 years in the stock market? You're crazy. This stuff is here to stay. It really is. Now, the way it's been in December, no. This has been an extreme anomaly, that of which I will acknowledge has just been downright ugly. All right, it has. I get it. I'm with you. I'm on your guys' team. All right, I really am. But I'm not doing you guys a service at all unless I'm giving a hard lesson, because I have been through this before, and I know there's people in the community that have also been through this before, and there's no other prudent move to make in a stock market like this than just to hold true, shut the book, go do something else with your time, and ignore it if that's what you have to do. All right? because you can stew about it. No amount of stewing about it is going to make it better for yourself. All right. So thank you. Welcome to you guys. I just found your channel and I'm in love. Hey, I can't argue with a comment like that. That's awesome. If there's any, look, I'm very, very aggressive on turning value back to individuals. All right. Now I've got 10,228 people in the group now. I don't know how many are active, but there's a lot of active subscribers in the channel. So I'm very, very aggressive on making sure that you guys get what you need. All right. If there's something, a particular topic or a nerve that you need me to touch on, I will be glad to do it. All right. I just be as transparent as I can with what I've got going on right now. Most of you guys know I'm a grinding, self-directed investor, just like you guys. All right. And the benefits are undeniable. They are. Okay. And all I can do is set the seed for you guys and allow you the opportunity of an introduction so you can take the information and validate it for yourself. Because I can tell you what, I received another comment through the community just today that alluded to the man holding down, you know, the smaller class of people, you know, people who don't have a lot of means, or the working class people, you know what I'm saying? Or it's some sort of large conspiracy about the large institutions holding down the working class people. You know what I'm saying? The only way that you can break free from that is to not buy into it. All right. And this channel allows you a conduit to do just that. Now, you're direct connecting yourself to the stock market, as crappy as it might be, but you're not paying 1.5 of basis points of expense to some idiot to sit there on the side and take no risk, while you're the one taking all the risk. You are, right? You're self-directed investing, all right? Whatever's going to come out of this turmoil, and I'm going to remind you guys here within the future, okay? This I can guarantee you. I will in the future remind you about December of 2018. I really will. And I'm going to remind you of how meaningful of a lesson that was in the stock market for me and for each and every one of you guys that are part of the community, because I want every single last person in the community to get it. All right. And it's gettable. All right. It's attainable for anybody out there. All right. And this program is tailor-made for the working class person. It's tailor-made, right? Because you don't have to pay a middleman to participate. You participate by nature of the fact that I introduce it for you, show you all the benefits, and you let it rip. All right. Thank you so much for finding your way to the channel, and congratulations. The message cannot be understated, man. Very, very appreciative of you. Yeah, I've got Mario Cruz here in the line. I've got Boeing and Google at excellent price. Google may be the top pick of 2019, guys. There's no doubt about it. I mean, good grief. $900 for a lot of you guys. That can be a starting share of Google. Couple, that's a 1,800 share position. I currently hold 10 shares. I'm looking at Google very, very closely as a potential double position for me. I may move from a 10 share position up to a 20 share position. That's how much I feel about Google in the long term. Now, no doubt about it, I feel that way still with my 10 share base position, but I'm using my smart money perspective, and one of my aspects of when the stock market does that, this of analyzing the stock market, and Google is on my radar. You know, Boeing certainly as well is on there. You guys know I've taken some starting positions in some of the spider ETFs that I've recommended to you guys, just to bring that sector allocation up a few percentage points, especially to staples for sure, and discretionary. Those have been the two areas of work that I've earmarked in the portfolio, healthcare as well. But made some really, really exciting moves in the portfolio. Just bought 100 shares of the emerging markets ETF. I forget the ticker symbol off of Vanguard. I could probably pull it for you guys now, but I believe it's VWO. I think that's it, VWO. And that's the emerging markets. I've always wanted to get exposure, so it was an identified gap in the portfolio that over the last week I actually took a position, 100 share position in that as well. So very, very excited about that. So thanks for offering those. I tend to agree with you. I don't know, man. I'm like a kid in a candy store now. So I just got to be careful and use discipline because everything looks cheap right now. The question is it? You know, I mean, these stock prices have really, really had a lot of tailwind for many, many years, and that's unwinding right now. All right. So you can't be surprised when the nature of the unwind is volatile. All right. You can't be surprised. All right. That's just what's going on, baby. That's what's going on. All right. Nice golf fish. I just finished maxing out my Roth this week. Was learning too heavy into my taxable account earlier on in the year, leaning too heavy. That could be true. You know, I guess you strike up, Dave, an interesting discussion about, you know, making sure that you're doing that max contribution. I know I've used the brokerage account for that very reason, just kind of as a surplus account. And now I've started the first trade account as well. Haven't done a whole lot with it. I want to thank anybody who started a first trade account. There's been a lot of interest in there. Not so much on the affiliate side for you guys that are interested. I've had 3 accounts that have come through on the affiliate side. For those 3 accounts that have made me eligible for a little bit of affiliate compensation, I do thank you for that. For anybody who thinks that I'm getting wealthy or I'm being greedy on YouTube, those are the numbers. I've got 3 so far. So for you guys that have actually done qualifying accounts with First Trade, I thank you for that. I'm enjoying the platform. I'm doing a lot of research on the platform, and I look at that as a really interesting conduit to people who need the solution of free trades. And for a lot of people in the community, man, who's starting out with less than 10,000, it's a great platform to start that investing career and save that investing fee, the entry and exit fee, to try to, you know, manufacture. A lot of you guys want to do short trading. That's fine. Whatever makes money, you know. What have I said many, many times? This game is about making money. All right, at the end of the day, and we deploy a lot of different strategies to do that. And First Trade just provides that solution to you guys. So I agree with that. Go Fit Golf Fish. Thank you. That got me fired up. Thank you. Kind of know how to push my buttons. I like it. Apple at 150, Google under at 1K. Anyone else tempted? Yeah, no doubt. I couldn't wait. I picked up Apple it was below 160. I added 30 shares to it, big position. Probably broke one simple rule of scaling. I probably could have justified taking half of it. But you guys know, man, I did $5,000 right into Apple. I'm good with it. Long term, I'm good with it. I took profit in the 220s. Okay, so to watch it come back like it has, I'm basically taking a scaling approach. Excuse me, not a scaling approach, a channeling approach to Apple. Channeling a stock is where you end up identifying where a stock is on its 52-week range. All right. And I felt like Apple was a little bit stretched at 220. I felt like it had to turn back. Now, I kept 21 shares of the stock when I sold off my position. All right. But it was just way too tempting to jump back into. And I'm down a little bit. I'm fine. You go long the shares and you're good to go. You live to fight another day. Now I'm happy at my 51 share position in Apple. So to answer your question, yes, I was tempted and I actually pulled the trigger on Apple. It's one of the finest companies out there. The ecosystem that they've built is second to none. And their services business is absolutely phenomenal. It's phenomenal. Where that thing goes into the future, that is their growth of the company. I just got an Apple iWatch within the last couple of weeks. That's pretty cool. Very cool wearable. I love it. So I'm testing that product. I love the product. And so I'm all about the stock. So what's going on, group? Ryan has some good advice as always. Yeah, I'm fired up this evening, if you can't tell. I got Noella's in the group here. Just one of my long standing. I don't know if Noella made her way into the Independent Investor channel when I had about maybe, I don't know, 20 subscribers. It seems like we've known each other for a long time, but she says, what goes down will go up, stay strong. Buy when the deals are there. Now, I know how savvy of a business lady she is as well, but also a very, very savvy stock investor as well. She doesn't pop into the Facebook group all too often, but when she does and offers her advice, I would advise you guys to listen, because I do endorse what it is that she's doing as well. She's got that entrepreneurial spark as well, and it's just great to hear perspectives from somebody from a different country. I just love it. Our neighbors to the north, we love them. And that's really one of the beauties about YouTube, is it just brings a lot of people together that may have never had the opportunity to converse and share ideas. And I just think that's a great, great thing. So thank you. Welcome to you. Thanks for popping in this evening and spending some time with us. Really appreciate it. One of my good friends, Teresa Ford's in here. I'm down $8,000. You're good. I'm down 20. You're good. Your portfolio is strong. Your companies are strong. It is a yikes. Okay. It's one of those things that you can look at. There's probably some potential there, Teresa. Yes, you're down. Okay. And I understand that it's one of those things that I want you to focus on it. I don't want you to ignore it unless it's causing some angst for you. There's nothing wrong with acknowledging that it's there. But I think one of the keys, and I don't know, I don't want to patronize anybody. Everybody in the group here is adults, hopefully. I don't know if I've got some 10-year-olds really tuning in and they're like, okay, this is amazing. I can so be kind of funny. But anyway, if we're all adults in here and we're kind of talking about, being critical, but not being over critical of your program, I mean that. All right. To look at your program and say, yep, I'm down $8,000. What can I do? Should I throttle back on some of my funding schedule? Should I beef up on my, retirement pension? Should I beef up on my cash right now? Should I be deploying new cash right here? Why has nobody asked me that question? Is now the time to buy? Well, I don't know again, but what I can tell you is we're down 25%, right? We had a ton of people justifying 25 points higher than, or 25 percentage points higher than here. So why is it not more justifiable to buy right here? That's just the way my mind works, right? It could be, all right? It could very well be, all right? And that's what I'm kind of looking at and very, very aggressively monitoring the stock market right now in its current condition, all right? I got Doug in the group. Well, it's a mess out there. That pretty much sums it up. I couldn't agree more. It is. It's a mess. I tend to not dwell on it. If there's any takeaway from my advice to you guys, don't dwell on it. Go exercise. Go play some guitar. Go read a book. Do something other than just worry about the stock market. Because again, if you take in the strategic approaches to the stock market, you shouldn't have been over levered. Now, if you made the mistake, like a lot of people fall victim to, and that's that entrepreneurial spark, man. You want to participate, all right? Don't beat yourself up over it. Don't, all right? You're a participant in the stock market. Give yourself some freaking credit. You're also a human being, all right? You're not a machine, all right? So give yourself a little bit of credit and identify where it is we can make what has seemingly been a wrong over the last couple months a right. And there are some things there that we can earmark to really improve upon and really benefit from. Is this going to be the December that you look back on and say, man, I wish I would have deployed some capital. What in the hell was I doing? I spent all my time crying about, being down so much in my portfolio. Why didn't I take a little bit more of a calm, level-headed approach and said, man, that was kind of my buying opportunity right there. You know what I'm saying? Now, I'm not saying that could be, but I've went through this so many times where, see, people know I invest now, right? People know I invest. So they're quick to say, and these are people that I haven't spoke investing with at all. And they're quick to come up to me and say, hey, about that stock market, how about that? Like I told you so or something. And I can't come back and tell them, look, I wouldn't be sitting on over $250,000, with no business to be sitting on that much money with my income without investing, right? So it's kind of a double-edged sword, and I just kind of shake my head and say, yeah, it's pretty brutal, but it's one of those perspective things to where, if I'm going to fail at life, or specifically the stock market, I'm going to freaking fail right, baby. I am. And don't cut yourself off from the potential of success in the stock market by being wavering. Be unwavering in the stock market. Don't be influenced by all the noise right now. Quite frankly, I'm freaking entertained by it, and I know for a fact. All right, I don't think we're doing the right thing. I know we are. All right, for the sheer reasons that I have expressed through the evolution of the channel, man, being direct connected, self-directed. It's a beautiful thing. It really is. And it's going to really, really present itself when we start back on an upswing in the stock market. Whenever this thing settles out, you guys are in for a positive awakening, and you're going to be like, wow, I just defined my risk tolerance on the cow patty side, right? Now I'm looking at my potential over here and saying, geez, knowing what I went through on that severe December 2018, now I'm kind of looking at maybe taking some profit off the table here. Maybe I understand now what Ryan was talking about when the market was seemingly going up every day, why he was taking more of a I don't trust this type of approach as opposed to a this'll never quit approach, right? Very, very key takeaway. The fundamentals of the stock market, all right? Google is mega cheap. Doug says going to be a red Christmas. I don't know, man. I will say to everybody in the group, Merry Christmas. Honestly, I from the bottom of my heart, I've always summed up the stock market as just being a very, very small piece of your overall perspective, all right? I do find that many people who are successful in other things in life, and that they've got things seemingly kind of under control, typically are very, very good investors. Okay, and I've said this many times. You're not going to enter the stock market and it's going to supplement for other areas of your life. It doesn't work that way. You're not just going to become a successful investor and then automatically you're a better person over here. It doesn't work that way, all right? I don't have that type of magic, okay? Nor do I believe anybody does, all right? If you want to pay for therapy, go ahead and do that. But I just think there's a lot of people out there who need to gain a little bit sharper perspective on what they want out of the stock market, work on it as much as they need to, but as little as they need to at the same time, okay? And what I mean by that is you want to be as aggressive as you possibly can, but pay attention to it as little as you possibly can because you know that your plan is right. Very, very important takeaway, very important. But Merry Christmas to everybody, man. That's what it's all about right there. Someone should push Trump off the wall. Nice. Somebody, Doug Whitaker. So Doug brings in politics into a financial discussion, man. I will just take a break and let you guys duke it out. I'm just happy that there's tomatoes not coming in through the computer at me right now. I'm actually happy about that. So yeah, if you guys want to push him off the wall, by all means, go ahead. I have no problem. I sent out a tweet this week that basically says, I can't believe the disconnect between our government and normal people in the world. I just can't believe it. I talked to Democrats, I talked to Republicans, and they're all on the same page. They can't believe how dysfunctional things are right now. Do you guys realize, and I don't want to get too political, but I will say this, we are incapable of doing anything. Big old waste of time. I look at each one of my work days and I'm amazed at how much I can get done in one particular work day where my country says, okay, Ryan, here's what I want you to do. I've got these 38 things that I want you to do in this one day, and my job is to bang them out. You want to know what? If I don't do that, I've got 300 people waiting to take my position. You know, that's the reality, man. And I just don't see that sense of urgency from our government. But thank you for getting me on that soapbox, Doug. I appreciate that. You actually gave me a chance to pause and actually take a drink of my cocktail. I do appreciate that. Thank you. Richard Leo, JD will not be charged. I saw that. We got a little run up today. I'm a 100 share position holder in JD. I'm down a touch. I think I picked it up in the mid 20s. JD.com, and I added an additional position here at 20, and it's just been lingering. forming somewhat of a base. JD's a buy. Okay. Now, I don't want you guys to just rush out and put all your chips into JD.com thinking that it's going to double and make up all these losses. Okay. It's a very small percentage of my portfolio, just like any of those Chinese stocks. I bought Baidu this week. I mean, why the hell not? Picked up 10 shares of Alibaba. Why not? Because it's absolutely been getting murdered. That's where the value is. So I was looking at China and I was looking at emerging markets, and a lot of people out there, if you guys want to just, throw stones at me, you can, because I don't think the China trade deal is going to go through within 3 months. Okay. I think this thing may take years. Why? Why is that? Because the Chinese don't care. They don't care. Okay. You want to know what the China cares about? China. And that's going to be all I'm going to say about that. All right. So 3 months, you actually think we're going to get a trade deal in 3 months? That's why I would suggest that everyone buckle their safety belt and be proud of the fact that they've entered into quality ETFs and quality stocks, and let the smoke clear. All right. Just let it clear. And it may take a little while. All right. That's the best advice I can give you from my chair this evening on the trade war, which actually I think, if I looked back at when the volatility really started to perk up and percolate, it was based around this issue. All right. I don't think it's the singular issue that should be affecting the stock market right now. I think the greatest secret right now that nobody talks about, and I think it's the number one threat to the stock market, and that is the national debt. All right. Corporate debt and national debt are the single most concerning aspect of what could bring the stock market to its knees if we don't start addressing it. That's my number one concern, and nobody talks about it. All right. So you guys can take that advice for what you will. But that's the one thing that has me the most concerned. China, I could care less. All right. I could care less. And it's probably the single headwind in the stock market geopolitically now. That I believe is the driver that's going on right now, because I think the stock market has gone so long without acknowledging the debt load and the debt size that it's just got used to it. And that is very, very concerning to me. It really is. All I need to see next week is a good time to buy. You may have your time to buy right now. Again, like I said, it's worth acknowledging where we are, down about 20% right now, closer to 25. I didn't even watch the end of the market. I was busy this afternoon. I had other things to do with my time. But we're going to continue to get to some of these questions here. I've got Mike O in the group here. I've been having a great discussion. Thank you for the technical advice on my last video. I think it was because I didn't hit the software for the lighting. But I told you I would let my technical department know about that and tell them to get their act together. Otherwise, I was going to fire them all. No, just kidding. It's just me. I'm just kidding. But I appreciate the advice, man. Very cool stuff. The volatility seems now another way to beat down supporters of sitting administration. A lot of sensationalism and manipulation. Now, I can't disagree with that. You got somebody that come on and blab a few words and the stock market goes down. That's why I said that the Jay Powell move was prudent. If the stock market can't stand on its own freaking legs, then what the hell are we doing here? You know what I'm saying? The stock market has to be able to stand up on its own, and we haven't even got to neutral yet, guys. You know, I mean, that's the scary thing. We've been in a manufactured environment for the last 10 years with artificially low interest rates. All right. That's been insane. Corporations have been basically taking free money. It doesn't get any better than that for corporations to just take money at a 0% interest rate, basically, and just do anything that they want in their company. They don't need to take out debt because they just borrow free money to buy back their own stock. It's just amazing. They don't have to focus on profits. Why would they have to when they've got access to money with no penalty whatsoever? Interest to me is just another word for penalty, right? It's the price that you pay, right, to borrow a certain chunk of money. If there is no penalty to weigh the difference between taking on that debt for the need of that debt, that's what we've been going through in the last 10 years. And it's coming to a head right now. That's a lot of what's going on right now. It really is artificially low interest rates. That's why I applauded the decision. I think it was very, very unpopular. And all the economist heads come on TV and talk about how poor of a move it is. Although I do agree that it was very, very aggressive in a short amount of time, it was a prudent move based on the data that's being turned out by the real economy, not the stock market. All right, two different things. Okay. Heck yeah, Ryan, bringing that fire. Yeah, got some fire tonight for sure. Not so much for me. I want to make sure that you guys are crystal clear and you feel good about what we're doing. That's all. And you should. And I've just got a little bit of, I don't know about this, man, a little bit of white flag, coming up and throwing in the towel. You guys got to let that stuff go, man. You got to let it go. This is the stock market, man. This is how it is. And if nothing else, man, at least we're providing a very honest message through YouTube, that of which more people need to hear. I know there's 10,230 people that make their way to the Independent Investor channel. And I got to be honest with you guys. That's 10,200 people that I wouldn't have been able to get to using traditional means. No way. And I'm freaking glad to do it. I think there's hundreds and hundreds of thousands of people out there that need the message. I know there's YouTube channels out there who are attracting hundreds of thousands of people for advice, really, that I don't think helps people on the ground level. I think it appears very, very attractive, but when you actually put the message to work in the trenches and actually say, here you go deploy this in your real life, I think most people sit back after an 8-minute video and they're like, what in the hell did I just watch? That's my assessment right now. All right. If you want to know my side soapbox. All right. Just joined up today. Derek, great to see you, man. Yeah, I'm fired up. And if you said that you just joined today, I always say congratulations, man. If you have any questions about the integrity of the message, don't hesitate to hit me up. Certainly, I provide this opportunity for you guys to come on here and kind of bounce some ideas. It's not for everybody, okay? I think investing should be something that everybody participate in, whether it be 1 out of every $5 or 2 out of every $5 or 4 out of every $5. Or if you're 20 years old and you've invested 5 out of every $5 that you have, I'm not going to get on here and apologize. You're young. Get over it. You've got plenty of time to make it up. Identify those other spots in your life that you need to improve upon. But the financial piece, if you do it my way, you're a freaking winner. All right. You are a winner. And I will tell you, congratulations right up front. I will never, ever apologize for introducing somebody to the stock market. It is the single path to wealth. Real estate, I'm a big advocate of, but honestly, I think for a lot of players that I'm talking to who just want to do what it is that's right for them and their families, if they're making, if they're a single family or they're a single mother or single father out there who are working, trying to get ahead, this is for you. All right. You can scale this business down all the way to a free $20 a month. And you can make this work for you. You can make it fit. All right. And that's the beauty of it. All right. And we're here to reach as many people as we possibly can, man. Welcome and congratulations. It's so good to have you guys here. Heck yeah, bringing the heat. Yeah, I am. I'm fired up. I got Alan. Before I started trading stocks, I never knew spreading misinformation was completely different from lying. Yeah. God, man, I love that statement. Holy moly. I may take that and quote it. Alan, I really appreciate you coming in and saying that. I've had to do this channel for a while with the idea that there were other people out there that saw the same thing that I saw. All right. Now I knew it to be the truth, but I really love those validations when they come through the channel. All right. Because I can sniff out a BSer really, really quick. All right, really quick. Now, you guys may come on here, and I'm really, really good at talking about the stock market. All right, but I don't script a thing. Okay, I don't need my iPad in front of me. Okay, I don't need to take notes on fundamental, what works in the stock market. Why? Because I've taken these fundamentals into the trenches many, many, many times, and I've come out on the other side fine. I'm still kicking. I'm still alive. I'm still succeeding even. And in retrospect, you look back on those decisions when you deploy them. Sometimes you enter into those and you're like, Jesus, I remember having about 30 grand in my Roth IRA, and I saw my portfolio a lot like Teresa's talking. And I think Teresa's got a hell of a lot more than 30 grand, but I had about 30 grand in there. And it was around the time of Brexit, I think. $6,500 adjusted back. I think that was a 20 or 30%, kind of similar to what we had now. $6,500. And I'm doing the same thing, looking at that, saying, what in the heck am I doing? Why am I doing this? And I'd been through it before, and I said, you know what? Let's rest on the morals of the program and see how it shakes out. If I'm going to lose, I'm going to lose doing it right, right? And I look back on those decisions, as hard as they may seem to be at the time. Those were the differences in my financial life, okay? Now, those didn't affect anything else in my life, but those were the decisions that defined who you were as an investor. It defined whether or not you were going to be able to succeed or freaking fail, all right? Because I always give the analogy, you could take 100 investors, you could give them the same amount of money, you could give them the same amount of products to invest in, and you would have 100 different results, right? You would have some of them get in, get pissed off, they'd leave and they'd fail, right? You'd have some of them get in, sell too early, and take a little profit. You'd have some stay long on the market and succeed. You see what I mean? There's never any guarantee in the stock market. And I hate to offer that, as cliche as it is, but that's the most important thing to kind of take away in understanding that the stock market owes you nothing. All right, it owes you nothing. But before I traded stocks, I never knew spreading misinformation was completely different from lying. Yeah, I mean, it's a true statement to Alan. I appreciate you offering that, man. That's pretty legit. I agree. The problem with that is a lot of the lying gets sugar-coated, all right? And it gets delivered through society and to society in a way that is socially acceptable, honestly. You see commercials on it all the time, and it pisses me off. Like, I watch that stuff and I'm like, you've got to be kidding. You've probably got an 82-year-old single, somebody who sat there and she's got maybe $2.5 million in the bank, and they look at the TV and they pick up the phone and they dial the number because the guy seems legit, who's telling them if they've got a portfolio over 500,000 to invest, it must be good. That to me is freaking lying. It's lying, all right? And those are the freaking the idiots, the fiduciaries that these people are trusting. And I'm here to deliver that truth, okay? And I'm sorry to say it that way. Some people think it's, I've got, it's not condescending, but they think I'm coming from an egotistical perspective. And it can seem that way if you take it that way. But damn it, pay attention to what's going on in the world right now with regard to what is socially acceptable. You buy a house for $150,000, you end up paying $325,000 over the course of the life of that 30-year loan. You want to invest in the stock market, you got to go down and sit with some moron who's 23 years old, who knows nothing other than to sell you on a few mutual funds and get as much money from you as possible. All right? Sorry to deal that much reality to the group here tonight, but that's the God's honest truth of it, baby. That's the God's honest truth about what's going on right now. And you can honestly kind of avoid both of them. The first one with the mortgage thing, I'm a little more acceptive of, because a lot of people just don't have 100 grand to go throw down on a home that they're going to make home for the rest of their life. The stock market is completely in your control, completely. And it's really, really overrated how much knowledge people want to sell to you as far as what you think you need, okay? You're gonna come onto YouTube and buy a stock market course from some 24-year-old who's got all of how many years in the stock market experience, guys? Come on. We gotta use our wits about us, all right? And when I said at the top of this live stream, this topic, it's mine. It's my topic, all right? And I will deliver it in my way, because unfortunately, I wish I could agree with a lot of those others, because I think it's so important to hear different perspectives, but you better be freaking right, okay? Because your information impacts people. And if you're pushing your message out to tens of thousands of people, or in some cases, hundreds of thousands of people, you better be right, okay? Not only should you have the credibility with me, all right? Credibility with me is gained through experience. That's it, all right? Number two is you better be freaking right. Dare to be right in the stock market. Otherwise, you're pushing out information that I would just assume you go and hurt yourself, right, with that information, but you're pushing out information that's hurting thousands of people, right? And I just don't understand. And I don't know if a lot of folks even have a soul to look into the mirror and say, you know what, I'm really not that good at this thing. You know what I'm saying? Really not that good. Maybe I should just stop. But that's not the environment that YouTube is conducive to supporting. All right. Very cool. Alan, great to have you in the group here, man. Today's a full moon. Ryan, today's a full moon. Yeah, that might be affecting my mood today. It's a full moon. That could very well be. Could be the full moon. You're right. Why is because Donald Trump loves you. Yeah. Thank you, man. Hey, I feel loved, baby. I get it, man. This is a correction. Mario Cruz, I agree with that. That's what I feel. Look, if this stock market ends up bouncing over the next week, maybe the S&P kind of brings back a couple of points here in this year, even first of next year. I know that's going to close out 2018, but we grab a few percentage points back, which I think we may. You may not have any other choice but to deem it a correction and not an identifiable, recordable bear market. Very cool comment. Thank you. Financial investor. Wow, I didn't even see Apple was at 150. Yeah, it is. It is. That's fine. It's no problem. Apple's at a good price. I think the PE came back at around 12 right now. So it just doesn't get any better. Alan says he's got 80 of Apple. We'll buy more when it bottoms out. I would too. I've got 51 shares of Apple. I'm cool. The core position at 21, I've got long profits in. You guys know that I rotated some profits out. But Apple's always a stock that I tend to always like to have a good barometer. It's a stock I always own. It's one of my top stocks to own forever. I've had a few folks disagree with me on that front. I'm not sure if that's a correct assessment. I don't know if I would, not acknowledge the power of the ecosystem that they've got, but that's just how I feel about it. So, yeah, it could go down further. I know I'm pretty down good on Apple right now, but it's WE, more money going in shares are just there. That's correct. I've got Mary in the group here. I hope I'm pronouncing that right, Yojimi. What do you think about high yield, 6% or higher preferred stocks, like some of the too big to fail banks? Oh, God. Well, okay. So if you'd been a bank investor for the last 10 years, I think you'd be in trouble. I know there's one YouTube channel, and I'm not going to name names. You guys can read between the lines. I lay it on pretty thick, who's really heavily invested in one of the banks, which is Goldman Sachs, who now is going through a huge investigation. I'm quite certain they've taken a haircut on that position. You guys know that I took a position in Morgan Stanley, not this week, but last week at 39. It was too much to pass up on. As far as the financial institution, AMT, which is American Tower REIT, I don't know why they're classified. I don't know so much about their business to really give you guys a clear answer as to why they're part of the financial services business. But I will have you guys know that I have entered into the SPDR sector ETF for financials. I do own Citigroup. I liquidated my position in Wells Fargo for a couple reasons. If you guys are interested, I can tell you, but this is a live stream, so I won't get into details. But JP Morgan Chase is another one that I'm happy to own. I thought there was another one as well, but I'm happy to own financials right here. 6% or higher. You'd have to run some specific numbers by me. Obviously, Blackstone Group, is one of those alternative management companies, and BlackRock is probably the most attractive right here. I think they're down at 365, 370 a share. That's extremely cheap for a financial services company that has 6 trillion with a T under management, and then Blackstone Group as well. We're paying right now 8%, and I've owned Blackstone Group for years. I really have. It's come off of its highs. It got up to, if not surpassed, $40 a share. It's sub 30 right now, which is somewhat concerning, kind of disappointing, but I'm glad. I'm fine to own the Blackstone Group. It pays me well. There is some limitations of owning a limited partnership within a Roth IRA. All that information is available on the Facebook group via my good friend who pointed it out to me, that of which I did not know about. There's only about $1,000 of profit that you can realize per year in a company like that. So you got to keep in mind, if you've got about a $10,000 position in Blackstone Group and you do end up making the 8% interest, there's $800 right there with no capital appreciation. So you got to be kind of careful about some of the tax sharing requirements and limitations on profits that you can make. And once I get up back in the black on Blackstone Group, I'm going to look to take profits in that, maybe roll it outside of my Roth IRA and take a new position in it within the brokerage account. So hopefully that addressed your question. I think you're asking more about some specific names, about some high yielding stocks. I tend to look at the best of the best. I enjoy Bank of America. It's one of my favorite stocks that I don't own in financials. And I opted again for Morgan Stanley, which was extremely attractive right here. But Investing Wisely says fired up today. Yeah, I'm fired up today. And I'm actually at 91 people in this live stream, man. This might be the very first time. If there was 9 people out there in the world that could make their way into YouTube right now and get me, nope, now it's dropping. Now, yeah, see, they pull out again to get me. But if I could hit 100, that'd be cool, man. 92 people, that's pretty rocking. I'm happy with that. So there's a lot of channel creators. I know Lydia just started out on her channel and she's doing live streams every week, man. I tip my hat. There's not a lot of people on YouTube who are willing to do this, for 92 people. I think it's fantastic. I love it. I think it's awesome. It's a great way to just connect with the people. And I think it provides so much more value. And it's something that I would kind of expect, honestly, if I was a consumer of this information, and I am. That's why I can't really resonate with a lot of the other messages on YouTube, because I really feel like they just got a personal agenda to become millionaires. So I guess I shouldn't say that about everybody, but it's just the impression I get. Sorry. Is anybody else making risky investments? Interesting enough, you guys saw Bitcoin make its jump, and I know one of the YouTube channels came out and said they were buying Bitcoin. One of those channels that I really, really respected, I lost it all after that. I'm sorry. I'm not going to come out with a freaking BS topic and talk about owning Bitcoin right now when there's chaos going on. You're playing into people's fears about taking a percentage of their money and buying Bitcoin. Come on, man. Jesus, use a little bit of freaking common sense. The problem is these kids, and I do mean to be condescending, really just don't have the experience, man, to look at that and say, and call BS. All right. Now, I will be wrong. If I'm wrong, I'm wrong. And I will come on this channel and I will eat crow in front of everybody. All right. I don't think that I am. All right. Bitcoin is down about 85% from last December. All right. Is that something that you want to speculate on? If you want to, go ahead. I'll give my stamp of approval, but you won't see me investing in Bitcoin. All right. Anytime soon or ever. All right. Too many good stocks out there. I've got AVA. I've not yet missed a Friday in months, and you're 100% with your reminding us to be defensive for weeks. You inspire me to trim and get defensive, so thank you. So with regard to that, thank you. I really kind of wanted to divide the community between folks with over 500,000, and I wasn't in that camp. You guys know what I'm working with about. Man, thank you, Doug. I appreciate that, man. That's rocking. Thank you so much, man. That'll help me refill for next week. Man, that's awesome. I freaking appreciate that. That's awesome. I work hard for my money, man, as you guys do. I'm going to say that it's not necessary for these live streams. My payment comes in other ways, but Doug, thank you so much, man. I tip my hat to you. That's rocking. That's freaking awesome. But to divide the community between those folks with 500,000 and above, to say, hey, listen, man, you only live once, all right? Use the stock market for what it's there for. Use it. And when you're done with it and you've abused it and taken everything you can out of it, you owe no loyalty to the stock market. So many people want to think that they just want to marry it, and like when they sell a stock, they're breaking up with it or some stupid thing. Get rid of that, okay? I want you to approach the stock market carefully and aggressively at the same freaking time, okay? And I know that may not make all the sense in the world, but don't approach it tentatively. And don't be afraid. I get people all the time. If I'm not happy with my brokerage account, what should I do, Ryan? Dump them. Dump them on their freaking ear. If they're not providing the service to you, I just got a call from Merrill Edge this week, and I was extremely frank with them. They asked me for my opinion. I'm going to freaking give it to them. You asked, provide a better service, And I basically told them, I said, look, I've recommended over a few $1 million of accounts to you, and you haven't provided any type of affiliate avenue for somebody like me. And they said, thank you so much for all those recommendations and kind words. And I said, you're welcome. I'm not providing them anymore. No way. I'm not going to do that anymore. No way. Not when there's better products on the market that provide solutions for the community that I'm trying to teach and avoid fees, right? If I've got a solution out there that provides that option and conduit to the stock market, I'm going to recommend that solution all day. It just makes sense to me, right? So I did try to do that, and it was very, very difficult to make that advice to people without getting people to think that they're trying to time the market. The only thing that was meant to come out of that was to take a hard look at your portfolio, acknowledge that we were at an all-time high, right? And if there was any room at all there to maneuver, rebalance, take some profit, put some cash to the side, that was the time to do it. Do you think you'll hear me come out and talk about throwing in the white towel now, or taking profit now, or selling stock now? Hell no. Hell no. I'm 100% convicted that you won't hear that while this particular volatility and downturn is going on. And I've said that. If you guys go back and check the content, you will see that very perspective, all right? It's hard for a guy like me to get my message through when the stock market's going up every day and you've got bright-eyed 18-year-olds thinking that they don't have to go to work for the rest of their life and they can just not work and start a YouTube channel and become wealthy and they don't have to work. That's amazing, right? You get a guy like me on who's talking about boring stocks and entering passively and buying passive assets for the long term. That's not sexy enough, all right? I tell you what, who's sexy now? All right? Now I've got a mess on my hands because I've got people coming to me being like, Jesus, I turned to YouTube and you're part of the YouTube community. Own some of this, Ryan. Forget it. I'm not going to be owning that stuff because I've got every piece of content in my catalog of videos that's on wax. It's proof. These things have been said for many, many years to say, look, we're in a 10-year bull market. Be careful, all right? We're at a market high, or we're acknowledging that the stock market is at record highs, You don't want to take a big, big lump of capital and just throw it at the stock market here. Scale into it. Make sure you've got your cash reserves. Some of this stuff sound familiar, guys. Sound like a broken record, but I tell you what, man, it is stuff worth repeating, It really is. It's worth repeating, and we'll continue to do that because there's going to be new folks that make their way into the community that need to hear that message. They need to understand that if they had $10 to invest in the stock market, and you, for the last 2 or 3 years, have been interested in the stock market, but you've been choosing to invest 0 out of those $10, I'm here to tell you that you need to get over that, okay? If you choose to invest 2 out of every $10, 20% of your total investable capital, and I just use $10 as an example, play with me here for a bit, right? 20% of your investable assets, it's so much better to be doing that and so much more rationale behind that line of thinking as opposed to, I don't want to do the stock market. It's like gambling. I don't want to play, right? So I'm going to invest 0. I don't have any time or tolerance for that type of perspective. I don't. It's lack of perspective, honestly, because you need to get over that. And the quicker you can get over it as a young person, the better off you're going to be in the long term. Because what's going to end up happening is you're going to start to get those validations at that 20% level, and you're going to start to yearn or have more desire to participate even more. That's what's going to happen. All right. You're going to start to understand why it is you should do everything you can do to invest as much as you can when you can. All right. Very, very important. Avi, that was a killer question, man. Thank you so much for that. That was awesome. The biggest gamble I have is Ford, down huge this year, but a great dividend. That's true. I'm just, you know me, Dave, I'm not a big fan of autos, you know, and I've had one of the group here probably bring the most attractive to me in the subsectors that I don't invest in, and that's the cruise industry. You know, casino stocks I put into that category, airlines I put into that category. There's just certain stocks that I don't necessarily gravitate to. And as I get older, I'm really understanding the benefit of diversification, you know, and that's my big knock on everybody just going with the dividend approach in its entirety. Okay. I'm not saying that dividend portfolio isn't important. You guys know the holdings in my account, how heavy in dividends I have, but that's just a pillar of my value investing section of the portfolio. Then I've got the fixed and the growth and the small caps, the diversified S&P 500, and the small caps, right? Well, I have 2 different funds that are small caps. That's why I said it twice. But totally looking at the portfolio as a whole, we've got all those different pillars in there. And I can't underestimate the overlooked importance of diversification in a portfolio. That's why I'm so big on ETFs. It provides that diversification up front. And for the folks that have scoffed at ETFs over the last 10 years, what can I say? What can I say? Who's got your back now? A lot of the advice that's come through, you know, when I was scouring the landscape, it's like, okay, you can build a portfolio and just pick 5 stocks. And that's supposed to be what you're going to be doing. And as you guys are finding out, you know, with the individual stock investing, you know, even with dividend investing, you know, you can pick that one lemon in your portfolio that really hurts you year over year. And it just takes one stock, you know, to kind of bring your year over year returns down a little bit. It can be damaging, you know, and the only way to protect that is to add diversification to the portfolio. And you can't have diversification owning a dividend portfolio of, let's say, 10 or 15 stocks. You can't do it. You'll understand over time how futile of an effort that is if you just try to be a dividend investor holistically. All right. It's just my opinion on the issue. I know there's a lot of people who understand dividend investing to be a sacred art, and I do agree with it to an extent, okay? But not as a holistic approach where we just ignore everything else, because you've got to have some foreign exposure as well. You've got to have some emerging markets. You've got to have some risk baked into your portfolio. If you're a young person at 20 years old, what in the hell are you doing going 100% into dividends? You know, I would say, you know, go into that diversified asset and look to build that base over time, because that base is that's what you're going to have when you get older, you know, that total market index. right? That's how I talk about entering into the S&P to start, if that's what you will, or the VTI. You're getting a great entry right now on the VTI to get up to your first 10 grand, right? After that, you can start to add some of that single stock exposure to the portfolio. Those cornerstones in the portfolio, very, very important. A lot of people will come on, they'll beat me up over it and say, you end up investing in the S&P to pace the market, then you invest in an Apple stock and you take a haircut of 30%, it affects your total portfolio. The problem with that perspective is you're justifying not doing that approach based on a specific time, all right? Now, look at any 5-year period of Apple and you tell me what the rate of return over that 5-year period is. And you tell me if that perspective doesn't work when you look at it over the broader time horizon. All right. That's the problem with that argument. I get it all the time. So guys, we're up to an hour and 25. I don't mind. I feel good. I'm going to continue to roll on here and try to get to most of these questions here. Companies must pay interest on debt and preferred stock dividends before paying common stock dividends. Plus, liquidation value is guaranteed, so good time to pick up those near below issue price, man. Mary, very well said. I couldn't agree. I've got to be just kind of careful here a little bit because everything looks really attractive right now, and I'm going to kind of take my time. I've been saving for this for a long, long time. I'm not going to take all my wad. I'm sitting on about 100 grand in cash right now. I'm not going to take everything and deploy it. I will deploy maybe part of it. The first step that I'm going to take, I was being real with you guys when I told you I'm going to increase my contributions to my employee sponsored retirement account. That's the most prudent move I can make. Right now I do 10%. I'm probably going to beef that up to about 20%, or I might beef it up even more than 20%. And what shortfall I have in my budget, I'm going to supplement from my savings account as if I've taken it from the savings account and pushed it to my employee sponsored, because it has to be channeled through my income, right? So that's how I'm strategically thinking about buying the dip from a dollar cost averaging in perspective as this stock market. If it does continue to go down, which would be the best thing if I did deploy a strategy like that, I'd hate to see it just return next week, and jump up 10% next week, which could happen. Who knows, and then I deploy this strategy and I'm still buying it kind of at elevated levels, right? So that's kind of what I'm looking at. So Facebook is toasted. You could be right. It's toasted right now. If you look at it, it's still, among the ad revenue companies, if Google's the top pick of 2019, I'm not sure how far back Facebook is in that discussion. It's a premier player. And I know it's difficult for me to be contrarian on the name. I own 90 shares of Facebook right now. I'm still just as happy to own it. It's just getting beat down. That's what happens with single stock ownership. But Facebook, I own for the long term. And I will come out a winner with Facebook long term. There's no doubt about it. I think it's getting really, really overblown. And there's lack of acknowledgement to how important Facebook is to the many companies that they do business with, man. Very, very important not to just to ignore that. So yeah, I'm holding my Facebook shares. You guys know, I mean, I have 90 shares of it. It's fine. It's about 5%, I guess, 4 or 5% of the total overall portfolio right now, which is a pretty good chunk. Most of my positions are 2 and 3%, sometimes even as less as 1%, with a lot of multi-equities, right? The sector spider ETFs, things like that I own as well. But Facebook's got a pretty good position right now. Great day to pick up Amazon, Google, Facebook, downward average. It may take downward averaging. Certainly very disappointed. The most disappointing in that group is not Facebook, it's Amazon, no doubt about it. I own 5 shares of Amazon right now, and I'm just watching it. Very, very tempted a couple times to double up on the position, and I haven't. I've got cold feet. I didn't really get close, honestly. I'm just exercising my right to hold the 5 shares. You guys know I've got 10 of Google, and then Facebook with the 90 or so shares of Facebook that I'm looking at right now. Those are just 3 companies that I have to invest in. I mean, that right there is the pillar of my growth portfolio. You guys never talk about CRM Salesforce as well. But you want to talk about a top pick for 2019? CRM Salesforce may outpace all three of those next year. They just delivered a phenomenal quarter at the wrong time, and those are the types of names that you kind of have to look at. Crazy PE, but I mean, that's one of the growth pillars in my portfolio that I'm absolutely ecstatic to own. What about Adobe Systems? I mean, you guys are leaving some beef off of this list here. I understand about the FANG names, I really do, minus Netflix. Netflix is one of those names I just can't get behind. It's one of those that I've never, ever taken a position in, but I do own the other four, Apple, Amazon, Google, and Facebook. I own those, absolutely. But Adobe, CRM Salesforce, those are two as well that I needed to own. And, the real alibi in the cloud play, you guys know, is IBM. Look at the entry in IBM right now. It's just insane. Just insane, man. I mean, they've been going through 5 years of rebuilding and restructuring. They've had multiple quarters. I think they went through a stretch of 18 quarters of profit deceleration. But I think with the acquisition of Red Hat and the cloud computing business that they're part of, the blockchain technology and being a player in that, you want to talk about buying Bitcoin, go ahead. I'm just taking a little different strategic look at blockchain technology and investing in big tech. You guys don't think that they're going to have a hand in this stuff, man? Forget it. You want to safeguard information for people? You don't think that Facebook is going to figure this out? I don't agree with that, man. I don't. Not only that, but it kind of gets overblown. If you came to me and said, Ryan, we're gonna give you this service, and we're gonna take your name, and we're gonna provide your name without your consent across the internet, I'd be like, it's already there. I've been able to Google my name and find out all kinds of cool stuff about myself for the last 10 years. What's the difference if Facebook does it? I haven't given Facebook my social security number. Come on. Facebook always says you have the ultimate and total control over the experience. Here's the thing. I want my experience with Facebook to be everything that Facebook has to deliver to me. That's just the way I feel about it. I'm just a nobody. I mean, what's somebody going to do with my information, for crying out loud? I'm sure as hell not putting my bank account numbers on there. I mean, what are they going to do? That's just my small rant on Facebook, but I'm still holding the shares, watching it go down every day. It's pretty fun. So I'm taking 3 times volatility shorts on indexes and 3 times velocity on commodities. That's pretty awesome. I got Speculative Gambler, who's offering a very, very legitimate and sound way of making money. And if you're in the 3 times X volatility indexes, the folks that are putting this market, they're making money right now, as you are. So good on you. I don't know a whole lot about them, but that is actually a way of making money when the market does turn south. And I'm quite certain you're making money, no doubt about it. I mean, it's almost a for certain that you're going to turn on the TV every single day and watch the stock market go down. And when it's going down, you're making 3x on your money, man. Good on you. Thank you for offering that perspective in the group and the community. It's pretty rocking, man. Very cool stuff. Yeah, 164 was the last base I'd expected. I think you guys are talking about Apple. I'm ready for this roller coaster, man. Marcos says he's ready. I don't know, man. I've been on the roller coaster the last couple months anyway, but I'm fine with it. So it says, Mario says Google's great. Noelle is trying to get some thumbs up in the group here. Guys, listen, I've been going for an hour and a half. Certainly, I was accused of being greedy last week on my live stream because YouTube put 8 commercials in my live stream, and I didn't notice it. It was an automatic placement, and I got accused of being greedy. And it was they unsubscribed from the channel, from what I understand, or maybe not. I don't know, because I saw a comment from the same person a week later. But evidently, I'm being greedy here. But actually, this is my time away from my family that I come on here and give you guys 100% effort. And if you guys feel so inclined, man, certainly hit the thumbs up, man. I don't know. I don't get any love on YouTube anyway, and I'm used to it. It's actually pissed me off. So if you guys actually resonate with the message, I know there's people out there that know a lot of people. I don't know a lot of people. I'm an introvert. So when I do have friends, I have friends for life. So, and I don't have very many of them, but if you do feel so inclined to share the message, man, bring them on. We'll welcome. And, I'll do everything I can do to help within my power. Let them know what it is that I do, how they can kind of get started, scale in, teach some of the strategies that we talk about. What's dollar cost averaging? What's a dividend reinvestment program? What does it mean to be a self-directed investor? I mean, and most of the folks who have been with me for a long time can understand and explain what that means. But for somebody who's never heard of it, and that was me up until about 8 years ago, I had never heard of the phenomenon and what the benefits were. But all I knew is I was frustrated with my financial planner, and I needed to find a way out. And this just ironically found me. So I'm glad to bring the message to everybody here who's part of the community. So Noella, thank you for always being a great friend and a great advocate of the channel. I certainly love to see you more in the Facebook group. I'm sure there's a lot of people who would love to see me more in the Facebook group. Fortunately and unfortunately for you guys, I don't do YouTube for a living. I have a full-time commitment on my job, and that takes the majority of my time. And that, quite frankly, is what puts food on my table. So not only that, but Doug helped me put some food on the table tonight as well. Man, I appreciate that. It's good stuff. My opinion on Facebook is that it's going to drown. You could be right. Man alive, I tell you what, they take a $500 billion company and flush it down the toilet. It'll be one of the biggest disasters of all time. I think they need to do a better job. You're exactly right. Talking about the board, I'm frustrated as well. He's always been kind of an egomaniac. I don't think he really cares so much about the company. And I think if they brought somebody in, I actually think Sheryl Sandberg is fantastic. So I think those two working at the top are kind of like yin and yang, honestly. But I think Cheryl's great actually for that company. I think she bleeds Facebook. She's very good about it, but. Yeah, I think Mark Zuckerberg, certainly the inventor, and this is typically what happens, as the company does mature and does grow. But, a company growing at 30% earnings that's trading at a multiple less than 20, you can't find that in the stock market right now. You can't. It's impossible. And I actually think Facebook is actually, aside from the last couple of days where it's adjusted back 10%, it was holding in there really well in the 130s to 140s. It was hanging in there really, really well. And now that it's dropped below 130, I haven't looked at the charts. I don't know where the next level of support is. But I don't know if I would necessarily get into Facebook right now, but I don't know if I would necessarily short it either. All right. That's just my perspective. Doug, you could be right. I responded to a comment earlier tonight, said, well, at best, you've got about a 50-50 chance of being right or wrong. And either one of us could be either one of those two options. So we'll see what happens over time. Just like the vid when he talked about it. Very cool. Speculative gambler, man. Good stuff, man. I appreciate your comment. And I'm just kind of cruising down here, and I'm not trying to cruise too fast because I don't want to miss anybody. I have 120,000 portfolio, but that's in Canadian pesos. That's awesome. That's pretty crazy, man. 120K portfolio, man. That's pretty awesome. Facebook is a good to buy right now. See, I'm different perspectives in the group, certainly, but financial investor wants to know about pesos, certainly. That's interesting. I don't know. It's funny to see how my money goes. I remember being in France and wanting to buy an ice cream, and it cost me like $6 for a freaking ice cream. And then I wonder why people are protesting over there because stuff's so freaking expensive, and I was just like, that's how it is. It's crazy. And I think it was like €6, which is actually like 8 or 9 US dollars. So interesting stuff, man. I follow Bill's channel. Becky, thank you for that support. I don't know if Bill's in the group here, man. He may be one of the 80s. He's pretty devout. I just thought for a second I saw his thumbnail pop in here. And if he is, I would like to call him out and say thank you. That kind of meant a lot to me, that special call out for that individual who came into the group. I don't know if it was a male or female, but he took the time to actually reply back to that individual and say, hey, I've been there, done that. And I was one of those people that actually sold. I panicked and I sold, and it was the wrong move. So good stuff, Becky. Thank you for offering that. I wish Bill all the success in the world, man. YouTube can be a cool side hustle for anybody. I sometimes question, and I'm not talking about Bill, but there's a lot of YouTube channels where I tend to spend a lot of time questioning the integrity of the message. I really do. I just think it's a lot of manure going through the YouTube nexus right now. And the more you can get an audience, the more you're supported by YouTube. And that's why I always ask you guys to just share the message, because, you know, a channel with a message like this, again, I don't have a lot of editing on my videos. I don't have a lot of graphics. I don't have a lot of thrills and spills and music through it and funny little things. And I'm not a comedian, but the message is deployable for sure. So Felipe is at the bottom yet. I average into my portfolio as a whole. It holds Apple, but it's not one I'm adding onto right now. I have more stocks I want to be buying. That's awesome. I was so tempted by Apple today. It is tempting. I don't wait too long. I mean, eventually it's going to turn north again. Alan Kane Mario cost $1.34 Canadian for $1 US, correct? Tell China to hurry up and give in. They're not going to. They're not. That's just it's not ever in our best interest to go up against cultural differences, okay? And our current president thinks that you can deploy whatever tactics or business negotiations with somebody who is not an American. So we'll see what happens, man. I have zero hope. Zero. I could be pleasantly surprised over the next 3 months. Whatever. Show me the money, baby. Show me. Because I have zero hope when it comes to China. Zero. I think it's going to get worse. And I don't think our big issue is trade. I actually think that the one thing that came out this week that was actually positive is we slapped a subpoena on 2 of the members of China that were actually caught, documented of other statements from other countries with regard to the technological theft. Now that I do believe is legit, and that's big, because if you drop the subpoena on them and actually tell them that they're breaking the law, that's a big deal, right? So that's one thing that I am focused on right there, is the technological loss there. I'm wondering how the new Democratic Congress will affect volatility. Typically, it's kind of a non-starter, honestly. I think the agenda over the last couple years, there's been a lot of stuff done, and I think there's been a lot of stuff not done. Now we're going to enter into the next 2 years of nothing getting done. So it's bipartisanship at its best, man. Here we go. This is what we voted for, so let's rock and roll, man. Let's enter into an era of 2 years of overpaid idiots in Washington, D.C. doing absolutely nothing for people, and that goes on both sides of the aisle, both sides. So what can you do about it? Help yourself. Help yourself. Yep. Sold Amazon at 1,600 last week. Yeah, probably an interesting move. I mean, you'll win on that. I don't know if you're thinking about entering into the position back again, but you know, you did the right thing. I'm holding it for the long term, so we'll see what happens. I disagree. You only know if the Fed did the right thing until 6 months after the fact. You could be right. There's just a lot of schools of thought on this, and I did offer 2 schools of thought in my answer. Do I agree with the move? Absolutely, I do. And that's awesome that somebody comes on and says, you know, I disagree. We'll probably see in 6 months what the ramifications are. So I guess my question back to you is this volatility a result of what the Fed did? Because by your rationale, in 6 months, we'll know whether or not the market can kind of stand on its own. But what I did say in the exact same breath, and that I thought that the rate of hikes in such a short amount of time has kind of been, it's viewed by the stock market as nothing but jarring. And that was my point. I hope you're right. I hope we are able to evaluate and see and potentially look back and say, you know, it was the right thing to do. You know, we're not even at equal for our interest rates. You know, there was no sign of inflation. Therefore, the school of thought is to not raise rates. So, it's one of those things that you got to be kind of, it's awesome to be a student of the stock market. It's cool to talk about these things. But what I came out with on my video is, look at how many YouTube channels grabbed that topic and said, holy shit, we're at 3% now, or 2.5%. Oh my God, Powell raises rates, the stock market tanks. And everybody wants to come on YouTube and explain why. I think that's probably one of the smartest comments I've seen in the group here, in that you won't see the effect of that until 6 months down the line. That's awesome, because that's the truth of the matter, But I find all the time we want to kind of jump on this wave and ride this wave of momentum when it really doesn't really mean that much right now. So that's awesome comment. Thank you. Whoever just threw down on the tip, man, I appreciate that, man. Just a heck of a, and I've got some money to buy some Christmas presents this year, man. That's cool. Thank you very much, man. No, in all sincerity, thank you. Merry Christmas to you guys again. I'm going to try to go as long as I can, man. I know I've got 78 loyal folks in here, getting the most out of this live feed. I'm so thankful that I've been able to, I'm not a polished speaker, so I'm very, very adamant about getting into this message and making sure that you guys are hearing the message, man. Very, very important. Because if we're able to take one investor out there, and make them feel better about what's going on, then we're doing the right thing. So very cool stuff, man. They balance themselves out. Yes, Ryan. I like that you talk this. We need Monty Hall. Let's make a deal. 800-point swing today. It was crazy, up 400 in the morning, and I didn't get to look at it. I was actually busy working. So it's that's just one thing. Speculative Gambler says Jeremy's dying. I will comment on that. I hope not. I don't wish ill will on anybody. I think there's a ton of people out there that can really, really benefit from his message. Unfortunately, I don't like his message. People come on to YouTube, man, for a genuine reason. They come on for a genuine reason. And I've seen some questions asked of him directly, and he drops the ball, okay? If you ask a channel creator like me, which I very get it on the live feed, like, hey, Ryan, can you talk to me about the importance of a retirement account? Sure as shit, I can talk till I'm blue in the face about the importance of a retirement account. When he was asked the question on the channel, he responded by saying, I'm a stock investor. I don't really think along those lines. I have a brokerage account. I'm not a real big retirement account guy. That's not advice that tens of thousands of people need to hear. What they need to hear is, you need to open the retirement account, and it needs to be your primary option until you have the money to roll into that retirement account and fund it from a max basis every single year, year in and year out. That's the prudent advice. Then when you want to open a brokerage account, you can go ahead and do that. A trading account, a taxable account, you can go ahead and do that. And there's multiple examples. I don't wish ill will on him. I just think that he benefits immensely from being the first to the game. And I don't know about Ricky. I know Scribner just did a collaboration with Ricky. Seemed all right, whatever. I don't know him personally, whatever. I wouldn't be starstruck to shake his hand and get where he's coming from. He's a kid, whatever, big deal. So you were able to come onto YouTube and he rents a Ferrari. So that's, I guess, really, really attractive to a lot of people. But again, I don't wish ill will. All right. I don't know if somebody like that, I've tried to actually help him. And the last comment I made on his channel was actually pretty constructive criticism. All right. And I got scathed on his channel. And that'll be the last time that I ever leave a channel, comment on his channel. I don't consume his content. I don't watch his videos anymore. Made a pretty rude comment back to me. And that'll be the end of it, because it basically told me that somebody like that has an inability to learn and evolved. And it also tells me that I think he's about 28 or 29 years old, maybe even younger than that. At that age, if you strike up an inability to learn at that age and you're kind of a know-it-all, where do you go from there? I just don't get that type of perspective. And let me tell you, man, my opinion does mean something on the stock market. It doesn't. And if you feel like you just want to blow me off like that, because the measure of me as a man is the fact that I run an independent investor channel with only 10,200 subscribers, and you want to blow me off like that, then I have choice words for you, man. And that's the way I feel. I don't wish ill will. I don't. I think the way to battle it is to actually support the one channel on YouTube that I feel like is the best. And Ryan Scribner is that. Now, aside from Ryan Scribner, I honestly feel like I'm one of the best. I really do. I really, really do. And I don't mean that to come across as arrogant. But here's the thing. I know there's people out there that very rarely comment on the channel, that very rarely interact with me, but they sit back and they listen, they consume, and they deploy the information for the greater good. All right. Now, if that's the impact by which a channel should be judged by, then I will be judged by that every single day of the week and twice on Sunday. All right. And I feel like YouTube all too often judges you based on your subscriber base and your retention rate. All right. And I don't have either one of those two things, quite frankly. Like, I don't mind breaking the rules and coming on and offering a 2-hour live stream to 80 people. That's breaking the rule. YouTube doesn't see any value in that. You know what I'm saying? I do. I do. I believe that there's value for the 80 people that come on and get a little perspective on the stock market from somebody who's actually been doing it for 25 years. There's value in that. And as long as we continue to do that and generate the conversation, and I enjoy the hell out of it, so as long as we're continuing to do that, then we're going to continue to do it. And that's basically it, man. That's kind of all I have on that particular topic, man. But I think I'm going to be doing a lot of house cleaning, actually, from a lot of just really, really poor information that's been pushed out through YouTube over the last couple years, when it was kind of the Wild West. It's very, very difficult to start an investing channel right now because there's so many out there. Everybody wants to come on and start a YouTube channel talking about stocks and investing. Why? Because maybe you bought a stock sometime and you've owned the stock for a while, or maybe you've been a long-term investor for the last 2 years and you want to come on and you think that you can talk about this topic indefinitely. And it might be a great idea, to come on and start talking about investing, and you come out with 10 videos and you're like, holy shit, I'm done with what do I talk about now? You know what I mean? So unless your motives are in line and you've got a topic that you don't have any problem talking about indefinitely, I mean, I look at the Independent Investor channel as one of those channels, man. I don't care how slow it grows. It's going to be here forever. And sooner or later, perhaps maybe when we reach some of those milestones, I may or may not reach out to that channel or maybe some other channels. Probably not, because it's hard to gain respect with me. It really is. It's just tough. And when you turn it off, then I don't have the slightest time of the day for you. I tend to focus on where I need to be focusing, and that's really on you guys that are so loyal. I've said many times I wouldn't trade my subscriber base for anybody, because I know that each and every one of the subscribers, man, there's a person on the end of that line, man, and it's if I'm sitting across from that person and just talking and rapping about finances in the stock market, man. It's a cool thing. I want everybody to feel like they're part of something special. I really do. Very, very aggressive on that. The smart money is stacking cash and waiting for the forest to catch on fire. Good stuff. Got rid of a couple of dog stocks today. Could be a good move if you have the ability to sell stock right now. Good luck. I'm done. I'm all done selling stock right now. I'm waiting to deploy capital if I get my opportunity. Hopefully I do, but I've kind of told you some of the couple things I'm going to do to deploy some strategy here going forward. I've been putting max on my 401k for the last 4 years. Jace, awesome, smart. I've talked to a lot of people who, by nature of the fact of their opportunity that they can max out their Roth 401k or the 401ks, a lot of people have asked me, hey, can I throttle back on that? And over the last couple years of the channel, I've said, absolutely. If you feel like you want to free up some capital, maybe even start a self-directed Roth, over the last 10 years, that would have been the time to do it. But hopefully you can continue to do that, Jay. Do you see how now that the stock market has adjusted back, now is the time that you really want to be looking to maximize anything that you can, because the more dollars that go in now are buying stock at a lower price. Very, very simple application, a lot harder to follow through with. So I bid you good luck on that, guys. I got a couple more minutes on this live stream, pretty much sold out tonight. I can hardly talk anymore, but I'm going to try to get all the way through this and make sure that I hit all the questions. So stand by if I didn't get to you just yet. Maxing 401k for me and my wife and auto invest 25 every day from M1 is my strategy. That's an awesome perspective. That's actually a pretty killer YouTube video topic. That's a very aggressive funding schedule. So Gotham's in the group here, and if you guys paid attention to that comment, that's pretty awesome. What is a fixed equities portfolio? Sure. So your fixed equities will be a mix between your corporate bonds and your U.S. Treasuries. All right. And I seek out my fixed equities exposure. Right now I have six. All right. Short-term bond exposure, intermediate bond exposure, long-term bond exposure. And then I believe I have 5, not 6. So the other 2 are the corporate side of the house. Okay. So my portfolio is made up of 5 fixed equities ETFs off of the Vanguard website. We've thrown that in the Facebook group, I know, a couple times. I call it the shopping mall of investing products. There will be a 0.10 expense, so very acceptable level of expense to enter into those ETFs, which are a group of those particular issuances along the fixed equities. Now, it's going to be a lot safer way of investing. It's going to be, it's going to hopefully outpace inflation. It's really to kind of preserve capital and not subject it to the volatility in the stock market. And I can personally attest to that now in watching that fixed equities portion of my portfolio. I told you I guys have about 25 grand in that, which is about 12%, I guess, in my portfolio right now, 12.5%, whatever it is. 25,000 split across those names. And typically you want to use a stock portfolio allocation tool to kind of give you an idea of how much bond exposure you actually need based on your risk tolerance. Now, even as an aggressive an investor, it still recommends that I have 10% in that. I opt for just a little bit more than that because I really, really thought that there was going to be some volatility sink in. And so I purchased those. I've had them now for about 3 or 4 months. I just started it, and I'm going to be coming out with a YouTube video that actually just talks about my fixed equities portfolio. But that's what it is in a nutshell, to answer your question tonight on a live feed. The only bad day is the lunar eclipse 2019. Nice. So hopefully, Jay, that helped you answer that question for you. That's what I've got. I own my bond exposure through bond ETFs. So that's what I do. Let me try to get to the bottom here, man. I got Kyle Kelly in the group here. It's a long-term game, baby. I love it, man. That's a hell of a comment to actually end on, but I want to make sure that I got to everybody in here, man. There's no right time to enter the game, and you're coming up with all kinds, all those. I don't want to even call them cliche, because they're true. They really are. The idea is that you come up with a plan that makes sense to yourself, that you're not overexposing, and you don't have any money for normal living expenses, even some luxury items. You got to be able to travel, vacation, etc., things like that. If you want to get aggressive on your program, so be it, do it. But make sure that you can handle the swings of being closer to 100% invested, as opposed to just maybe, when the market was at an all-time high, I was looking at people entering into the stock market, at a 20% exposure rate. Define your level of exposure and always make sure that you're erring on the defensive side of your exposure protocol. And that way, if you wanted to increase them, you could, but you're not second guessing yourself by saying, good grief, I went 80% in. with my available cash, I wish I would have went 50%, or I wish I would have taken a quarter of my money and put that to work. You see what I mean? It's a big fundamental difference between institutional investing and investing with a financial manager as opposed to being a self-directed investor. I absolutely put a lot of value in having that cash pillar. I cannot stress enough how important that is. I could give a crap less whether or not it's outpacing 2.2% inflation. I could care less. I care more about the liquidity and the availability to deploy in the stock market when it's doing this right now, right? Wouldn't it, ask yourself, wouldn't it be nice out there if you had the ability to invest, in the stock market right now, some available cash? It'd be very, very important. Come on, Ryan, you sound like a crypto person. Everyone has been investing for 15 years plus, knows the stock market is going way down. No, I don't. Sorry to disappoint you, man. I would not put cryptocurrency in the same avenue as I would the stock market. I did have my thoughts about the stock market being at an all-time high. I will acknowledge that. If I thought that the stock market deserved 100% of my investable capital, then I would have done that as well, which you guys know I did not. All right. That $100,000 could have been working over the last 10 years for me. I chose not to do that. Why? Because it's not part of my investment program. My invested dollars are my invested dollars. And if I am going to wake up on next Wednesday and Amazon has gone out of business, and Apple has gone out of business, and Intel has just magically stopped making chips for computers, and Microsoft has stopped making and deploying one of the best cloud applications in the world, and some of our growth stocks have gone away. We want to beat up Google and Facebook all day, but I tell you what, it'd be interesting if we could just wake up one morning and they weren't here. Let's just say we wake up Wednesday and say, you know what, Facebook was all a farce. It's gone. Can you imagine how? I think that would be like pulling a drug from somebody. I really do. So no, don't get me wrong when I say that it was fair to acknowledge that the stock market was at an all-time high. And I have to be very, very careful with providing information to people as a beginning investor, okay? I can't sit here and tell you what it is that I do and expect that somebody who has zero experience in the stock market is going to make any sense whatsoever as to how I go about applying my risk tolerance of a 7 out of a 0 to 10 scale in the stock market. What does that mean for an investor, And that's where I feel like a lot of YouTube channels fail in that, one in particular, honestly, that said, I invest this way, so therefore you should tune into my channel. And because I say that the stock market is going to crash and go to 0, you should listen to me. I'm not going to do that, okay? I tend to rest on historical premise, and I will not play ball and say that the stock market is going way, way down. I don't talk in broad strokes like that. Will it continue to correct? I don't know. Could it come back 10% within the next 2 weeks? Yeah, it's got the capability to do that. I've been through most of this, but a lot of my positioning over the last 10 years has been summarized in this manner. I'm not going to sit on the sideline forever. Okay, I'm very, very aggressive on being a passive investor. Okay, I trade, I passively invest, I have fixed equities. I don't have precious metals. I would like to, because I'm an investor's mind, and I'm not going to sit there and try to time the market because that's not something that I advocate for. All right, now, in part of my portfolio, I kind of do that, all right, by taking small trading positions. My short-term gains from this year have been around $20,000, okay? Now, my unrealized gain right now is down. I told you guys I was down about $19,000 right now, okay? Those are unrealized, okay? Because I've always abided by a rule of not selling stock in the red, okay? I don't care how far Amazon goes down. What's the worst that can happen? It's going to go down 50%? You think Amazon's going to go down 75%? I'm willing to accept that, right? And you guys have to understand, I mean, I'm a leader in this, okay? Remember when I said this is my topic, okay? I'm willing to put my mouth where my mouth is, or my foot where my mouth is, whatever it is, you know? And that's really the confidence that people need to understand, because I'm not going to baa like a bunch of sheep, all right, and follow a crowd when I feel like the information is not prudent to what a new investor needs to hear. That's the way I feel, baby. Laugh out loud, playing penny stocks, and it's paying off. Good luck with that, Doug. I've done that before. I lost my ass. So good stuff. Speculative gambler. I'm only down 20% since my stocks were down before. The drop in M1, bought stocks at 30% plus what they were worth. It's an interesting statement there. Really, I mean, knowing how to value a stock, but typically when I have a stock pinned and I identify value, that can hurt you as well. Okay. The stock market's very humbling, in that you can think that you've got it roped in and you got it figured out, and it'll bite you. You know, it really will. So just got to be kind of careful. I took my profit on Apple. I had been at 146, looking awfully interesting again, though. Fixed equities, those are a couple positions there. GLD. I just had a bunch of comments thrown in the group here. No one knows what will happen in the market. Otherwise, we would all be rich. Yeah, it's funny you say that, Lydia. And that'll be the comment that I actually end on. I actually do need to throw in the live towel on this live stream. I know there's a lot of people that catch it after the fact. There's a lot of people that actually sit and watch the whole thing. And sitting through a 2-hour live stream is a big ask. I would love to trim it down a little bit, but to be honest with you, I love doing it so much, and I feel like there's enough interaction to justify the time. But I will end on Lydia's comment there. No one will happen in the stock market. No one knows what will happen. And I've said that from the beginning. I really have. Enter into the best companies that you know are out there, ones that you want to participate in over the long term. Look at some of the 5-year, 10-year historical rates of return. I mean, Amazon's up 33,000% since its IPO. All right. If you had tripped and fallen into Amazon over the last, years, look at Apple, same idea, right? It's tens of thousands of percent of rate of return. If you had just tripped and fallen into some of these great names and just given it a little bit of time, as opposed to look at it from a short-term basis and saying stocks are going down right now, so I'm going to make my decision based on what it's doing now. That's a very, very tunnel visioned approach to the stock market. I won't play ball. I won't. Sorry. Again, right, wrong, or indifferent. That's the advice that people need to hear right now, is to be strong. Otherwise, don't do it. Don't do it. If you're going to play in the stock market, man, do it right, or don't do it at all. Guys, thank you so much for tuning into the live stream, man, for 2 hours and 7 minutes. I appreciate your time. I'm going to move on with my holiday week. Merry Christmas to everybody. We will reconvene again for next Friday's live stream, man. Thank you so much for making this a ton of success for me. This was a lot of fun. I expelled a lot of energy on this one, man, but I hope you got something out of it. I don't mean to waste your guys' time. I don't mean to waste mine, but I really hope you got a really sincere message in tonight's live stream, and holding true and wading through this volatility, man. This will pass just like anything, and you'll be able to reflect back on it and kind of evaluate how it is that you handled it. Guys, have a great weekend. Again, Merry Christmas, and I'll be signing off now, guys. Thank you so much, man. I appreciate it.